Welcome to Heresy Financial. Thank you for tuning in. I wanted to give you guys an explanation of what's going on with monetary policy right now, because everybody's in a kind of a big disagreement right now when you look at it's typically the mainstream versus the permabulls who are saying, hey, this is deflationary, and some other people are saying this is inflationary. And some people are scared of deflation, some people are scared of inflation. And so I want to provide some explanation, some clarity, because most of the time people are using the terms in different ways with different definitions. So I want to dive into that, provide a quick explanation, and hopefully that'll give you a little bit of clarity on maybe some steps that you can take in this unprecedented and crazy environment. Let's dive in. Okay, so there are the classical definitions for inflation and deflation, and that is monetary inflation and deflation. That means an expansion or a contraction of the actual money supply. That was how that term was used for a very long time until pretty recently. That term has kind of changed, and through what I would call propaganda, but kind of forced out through the Federal Reserve, basically, that term has changed to mean an impact on prices, which for this video, and I know that it's really hard nowadays to make a distinction between the two, I'm going to try and say price inflation and price deflation when I'm talking about prices, and then money inflation and money deflation when I'm talking about an expansion or contraction in the money supply. But most of the time now when you're listening to the news and listening to the Federal Reserve, their press releases and everything, they're talking about price inflation and price deflation. Now, ever since 2001, deflation has been the boogeyman. It was never the boogeyman until then. Really, in 2001, they started this program where they really saw a need from their perspective to inflate the money supply. And so they started seeding this fear of deflation into the American public. That was never there before. And that was the first time that they started doing that and saying, we're going to basically they started seeding the fears of deflation and then saying there's really no risk of it, but we're going to do everything that we can in order to avoid it. People like Alan Greenspan and Bernanke and other Federal Reserve officials, they've spent the last now 20 years seeding this fear of deflation into the public. Now, if you are just an average Joe and you go to work, you buy your groceries, you pay your mortgage, you enjoy your family, what do you have to fear about deflation? Price deflation. Nothing. Prices get cheaper. That makes your life infinitely better. You get a little bit of a raise at work, your money goes further. You don't get a raise, but things get cheaper, your money goes further. As things move on, your life gets better. Now, there are certain industries that have had price deflation happen at really, really fast paces. And we have not seen that result in anything bad. That has only resulted in things good. The best area you can see this is electronics. You've seen per unit of computing power, and just the technological advancements, technology is getting cheaper and cheaper and cheaper. And that has only been good. We have not seen any job layoffs. We have not seen any, cost cut. It's resulted in nothing but absolutely tremendous results for the technology industry, because as things start off expensive, there's the early adopters who have money, who buy it. That seeds research, production techniques, and technology and efficiency comes in and makes the things cheaper. And ultimately, that feeds on itself, makes things more accessible for everybody. Maybe your margins might go down, but things get cheaper, so maybe your margins go up. But ultimately, the industry gets bigger because more and more people can afford it. And as more people can afford it, that means more people buy it. That means their quality of life gets better. They're able to buy more things with their money. So whether it's, on a small scale, like an individual in your family, things get cheaper, that's good. If it's in an industry, things get cheaper, that's good. And from an economy standpoint as well, that's good. And up until the Federal Reserve was created in 1914, deflation was the natural state of the world. It all throughout American history, you had just deflation, 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 deflation. And so if you were to talk to, your grandpa, if you were in, 1910, and you were talking to your grandpa wouldn't say things to you like they say today, like, oh, back in my day, that was so much cheaper. You could buy a burger for 37 cents. They would say, Back in my day, things were so much more expensive. It cost a lot more to live than it does today because everything always got cheaper. You had massive deflation, and so with wages, it was never an argument or never a question of, hey, we need to raise wages to keep up with the cost of living increase. It was always, hey, we need to lower wages because it's putting businesses out of business, and so we need to lower wages. But the thing is about wages, they're always lagging. So when price inflation or price deflation happens, wages are always lagging. And so the typical person who relies on wages to pay their bills and to make ends meet and to create savings and investments, their money goes further year after year. Even if you have to get your wages cut later on, each dollar is going further than it did before. And so basically your wages getting cut would allow you to afford the same, not less, as what you did before. And they're always lagging. And so ultimately the quality of life gets better for everyone, a lot easier, especially for the people with next to nothing. Because every year that they, if they're not able to make ends meet this year, things get cheaper, they make ends meet next year. Things get cheaper again, now they have a little bit left over. You put some money in the bank, every year you don't spend that can go further and further and further. And so your purchasing power of everything you're doing increases. Now, it's not good for the elites because inflation transfers purchasing power from the public to the elites. And so the people who are in control, the government, the Federal Reserve, and the people, basically, the crony capitalists that are, basically parasites on our economy. That's not free market. That's, let's influence things and let's game the system. Inflation helps them because they're able to take out massive amounts of free debt. And if things get more expensive, then later on when you have to pay that debt back, then you're paying it back with dollars that are worth less than before. And what you're able to buy gets more expensive. And so even something as simple as buying a house, that house that you bought 30 years ago didn't increase 10 times in value. It just increased 10 times in price. And so you see price inflation, but the value didn't change. It's the same house. There were no renovations done to that house. There was no change in the neighborhood. There's still the same school next door. And so the value didn't change. The purchasing power of the dollar did. So that helps people with more money exponentially. The more money that you have, the more inflation will help you. And so that's where some of the fear is coming from price deflation. It's from the top. It's from the people who have passed the absorbing barrier, where they're on the other side of that risk factor, where they're basically locked in, and that snowball effect works in their favor versus the general public. Price inflation makes their life harder. Okay. So where does price inflation and deflation come from? You'll hear lots of different theories about this, and they're all garbage. The only place it comes from is a supplier contraction in the money supply. That's it. Inflation is always and everywhere a monetary phenomenon. That's Milton Friedman. It is 100% governed by the supply of money. You increase the supply of money, you will eventually see price inflation. You decrease the supply of money, you'll eventually see price deflation. And that's why when you had a gold standard prior to the Federal Reserve starting to erode the power of that gold standard in 1913, that's why there was always deflation. Because as more and more goods and services and products are created in the economy, there's the same number of money that is there to represent it. And so each one of those dollars, those gold units, is representing a larger portion of the total economy. So if you store an ounce of gold, next year when there's more products and services, that gold will represent more of the economy. Whereas if in situations, even in gold standards, there have been periods of big inflation where we've had a massive increase in the amount of gold that has come into circulation, primarily when Europe came over and took all the gold from the Aztecs and the Mayans, the Incas in South America. When they took all that gold, there was massive monetary inflation all over Europe, and that was just because the money supply increased. It's strictly governed by very simple supply and demand, where when you have a supply of money increase relative to the amount of goods and services, then you're going to have prices go up. Okay, so why are people scared about deflation right now in this crisis? Because we see the Federal Reserve is unloading trillions of dollars into the economy. Monetary policy that is more accommodative and easy, and creating money out of thin air, literally at the fastest pace they possibly can. Money is being created out of nowhere, just at record paces. Same thing with fiscal policy. We see the government unloading massive amounts of money into the economy, just doubling the deficit at least this year alone. That helicopter money package is, is $1 trillion, if not more. And who knows how much bigger it will get, how much more it'll cost, how long it will last. And so when we see all this new money coming into the system, how could anybody possibly be scared of deflation? Well, it's because of credit. Now, credit is technically money right now. It is, because when you go and buy a house, there's money created in the system that wasn't there before. You put your down payment down on that house. The person who sold it to you walks away with the money. You put your down payment on, and the bank loans that money to buy the house, but now you owe the bank money. And so more money is now in that system than there was there before. That money didn't come from somewhere. The bank actually created it to loan it to you. And especially now banks, as of this week, banks have 0% reserve requirement now. They're not required to reserve, hold 10% in reserves or 1%. It's zero. There is no requirement on reserves at the bank anymore. They can literally create credit as much as they want, which is insane. But they can do that now. But credit is money. It's when new credit comes into the system, new money is created. And so when you have a economy that's built on this really easy debt, and it's a house of cards, it's a really unstable system. When it starts to collapse, that credit starts to evaporate. It starts to be sold off at much lower prices, at fire sale prices. We've seen junk bonds trade at much lower prices. They're getting clobbered. We've seen investment grade corporate loans getting clobbered. We've even seen munis getting clobbered, and treasuries as well. And so when debt starts selling at cheaper prices than its par value, it actually creates a contraction in the total supply of money that's in the system. And so that is a deflationary phenomenon. That's when things start to collapse, you experience deflation. Because when you have an economy with false growth built on debt, the cure for that is going to be a recession, and that's going to wipe out malinvestment, which is mostly debt. And so you are going to have deflation, monetary deflation. And that will eventually result in price deflation. And the companies that are not able to survive will fail. That will happen. The recession is the cure for the disease. It's not the disease itself. The disease is all the malinvestment. It's the debt. It's the easy money policy. It's the house of cards that we've built. And so the recession is a cure for that. And then a stronger system will emerge out of the rubble. So the Federal Reserve and the federal government does not want this to happen. And so they're doing everything they can to try and keep this bubble inflated and keep debt at these artificially high prices with these artificially low yields. And so they're pumping tons of new dollars into the economy to try and compensate for the contraction of the total money supply that the collapse in credit is causing. And so once that liquidity issue is kind of solved, the genie will be out of the bottle. Once that contraction in credit, which is technically monetary deflation, is made up for, the amount of cash that has been pumped into the system to make up for that, the genie will be out of the bottle and prices will start to skyrocket. I detailed this in very recent videos before, but eventually one of the main causes of that is going to be treasuries overseas are being sold off. They're coming back home. That's what all the swap lines are open for. And once the other central banks in other countries have all these dollars, if you don't want treasuries, you definitely don't want dollars. What are you going to do with that? You're going to pay your obligations, your liabilities. You're going to start to spend it, get rid of it as fast as possible, because the only reason they had treasuries in the first place was because the emergency measures from 2008, they're dumping them. They know that inflation, they know they're losing purchasing power by holding onto treasuries and dollars. So the only place all those dollars are going to end up is back inside the United States. And what that does is push up the price of goods and services, especially when we have a massive demand and supply shock at the exact same time. And so we're going to witness price inflation even in the midst of a temporary monetary and price deflation happening. The end game is inflation. And so any deflation that we see in the meantime is a chance to prepare not a chance, not an opportunity to kind of believe the scares that deflation is the boogeyman or the bad guy. If they had just left things alone and we had a ton of deflation, that would be one of the only good outcomes of an economic collapse. Everything is cheaper. Why would it be better if during an economic collapse when you get your pay cut or you lose your job for things to get more expensive? It wouldn't. The only thing that good that comes out of that is things get cheaper. They won't let that happen. And they're going to print money so fast and so far that they're going to let the genie out of the bottle. And we're witnessing a collapse of basically all fiat currency right now. So that is the explanation of deflation versus inflation. Hope you enjoyed it. If you did, hit that like button, subscribe button. Let me know if you have any questions about what I said in the comments below. If anything I said was not clear or confusing, or maybe you disagree, let me know. Thanks for watching. I really appreciate it. You guys have a great day.